In today's episode, I'm going to talk about how I became a profitable day trader, and I'm going to share with you 3 steps that I would take if I were starting over today. Now, you may have heard the stories of a day trader who ends up becoming incredibly successful, and they basically hit the ground running. Whether it was beginner's luck or they're just naturally really good at it, they start trading, they're making money right away, and they go on to be a very successful trader. That was not me. And it probably isn't you either, because that seems to be the exception, not the norm. For me, I struggled to find success in the market. And in fact, I came up against failure so many times, I'm borderline shocked that I stuck with it. And I think I stuck with it for completely irrational reasons, because all of the facts in front of me were telling me to quit. And I want to give you just a sort of, through this episode, share a couple of stories of times where I faced failure and probably could have easily quit, but I stuck through it. Now, the first was in the late 1990s, which dates myself a little bit for how old I am and for how long I've been interested in the market. That was when I first got a taste of the stock market, and I got it because the school that I went to had a semester focused on the dot-com bubble and focusing on the stock market, how to trade in the market, how the market worked, and everything else. So in that class, and this was in, I think it was 1998, that I had this class, we were partnered up, and I was partnered with one of my friends, Cooper, and he lived in the neighborhood where I grew up in Vermont. And he and I had a pretend portfolio, and we invested in different stocks in that portfolio. And, during the course of the semester, we got a feel for how these stocks were moving, and we were making money. I mean, pretend money, but it was like, this is really cool. And from that moment forward, I was like, kind of knew that I was really interested in the stock market. In fact, during that same year, one of my classmates in our writing class, we had to write little biographies of each other just to kind of test our writing skills. And he wrote my biography. He wrote in it, I still have a copy of it, something about, in 20 years from now, 15 years from now, Ross is going to be in New York City, working on Wall Street, and in the stock market. That didn't end up completely happening, but it was pretty close. And so that was from the age of, I was a teenager, maybe 13 or 14 years old. And so at that point, I decided I wanted to put my money into the market. Now, I had a job, my first job, and this was what I was doing at the time, was delivering newspapers. So I was a newspaper delivery boy, and I was mowing lawns and, doing some like odd jobs for neighbors, painting and stuff like that. So I'd saved up a little bit of money, and I went to my local stockbroker's office and I said, I want to buy shares of the American Ski Company. And they said, okay, fair enough. How many shares do you want to buy? And I said, well, I've got $100 and I'd like to put it all in. And they said, son, that is going to be a problem because we charge a commission. It's $50 to buy and $50 to sell. So your $100 is gone. Fortunately, they didn't take my money. I mean, that would have been really mean of them to do. But they turned me away and said, come back when you have some more money. That was my first kind of, first little letdown, first little failure. And I accepted that I didn't have enough money at that time to start trading, but I didn't lose my interest. Now, today it's different. Because today, if one of my kids wanted to open an account with $100, you could do it with Robinhood. Commission-free trading. You could get your taste of the market even with $100. And while you're probably not going to make a lot of money with an account that small, you would gain a tremendous amount of experience. You would learn about the market, and that's worth much more than $100. Financial literacy. You really can't actually put a price on it. Just by understanding how the market works, for active trading, it's going to make you more likely to participate in your 401k, your IRA, and participate just from the long-term trends that are in the market. So I had this first little taste of failure, and I didn't lose hope. I came back, and in 2001, I funded my first real money account with Ameritrade. I opened an Ameritrade account, and this was before they merged with TD Waterhouse and became TD Ameritrade. So they were just Ameritrade, and I funded the account with $1,000. I had now saved up a little bit more money, and I funded the account. I did it during summer while I was in high school. It was a summer kind of, I had the money, and I was like, I'm going to put this is something I'm going to do every single day. I'm going to watch and study the market. And I think I had this dream that I would become successful, that this was going to be my thing. But I wasn't day trading. I didn't really know how to day trade at that time. And this was before YouTube or anything like that. So, trying to teach myself I didn't know how to learn. So what I ended up doing was funding this account with $1,000. And with that $1,000, I bought shares of companies I knew. I sort of was fancying myself, I guess, as an investor, a young Warren Buffett, if you will. And so I bought shares of ExxonMobil, Caterpillar, Johnson Johnson, Pfizer, US Steel, shares of companies that I was vaguely familiar with. And I just parked it there. And every day I opened my account and I checked my balances. And one of the things that I did in those days, which was really great, was I tracked all of my trades. So if we look on the screen share here, I'm going to pull down this software right here. This is the software that I use today for tracking all my trades. And I actually have, if we look at this on a yearly basis, I've got right now, let's see, 2016, 17, 18, 19, 20, 21, 22, 23, 24. So I've got all those years of trading performance right in this platform, which is amazing. So I can go through and I can look at all of my analytics. $12 million in gross profit, 11.1 million in net profit, 66% accuracy. I can look at all of these trades and really understand the time of day that I trade the best, the price of stock I trade the best, et cetera, et cetera. So what I was doing in those days, back in 2001, was I was tracking all of my trades in a little ledger. And I wish I still had it. It was this little red ledger. I hope someday I find it. I don't know that I would have thrown it away, but anyways, I haven't been able to find it. But I had this little red ledger and I tracked all of my trades in it. So, and they weren't really buying and selling. It was just the positions I was in. But I tracked the position, why I bought it, what my sort of, I guess you could call it a thesis, what my thought and thinking was on why I should get it. But over the course of the summer, my positions were more or less unchanged. So by the end of the summer, the account, I want to say it was at $1,060. And for some reason, that number sticks with me. Maybe it was $1,160. The 60 especially sticks with me. And it's been so many years now, more than 20 years. So I think that it was something like that. But regardless, I made basically nothing. And so I took the money out of the account and, I needed it for other things. I had to buy a car. So anyways, took the money out, didn't make much progress. And I think it was the following year that one of my friends in high school made $16,000 on a penny stock, which is incredible. I mean, for anyone 17, 18 years old, it's a lot of money to make. So he made all this money on a penny stock. And again, I was like a little bit of FOMO, because I was like, man, how did he find that stock? And that's what I couldn't figure out. Eventually, I learned that it was one of our friend's dads who gave him the tip. And I have no idea how he got it, but it was just some random little penny stock, maybe one of those pump and dumps that you get little things in the mail for, postcards. I don't know. But in any case, my friend made $16,000 on it. So, I again got this little taste of all right, someone else out there has made money. So my first failure was in the late 90s trying to open, fund or buy $100 worth of stock. My second failure was in 2001 when I funded this account with $1,000, but I wasn't able to grow it. So then I took some time off of trading. I just felt like it wasn't worth my time. I had tried, but I couldn't figure it out. So now fast forward to 2008. It's 2008 and I'm living in New York City. I have a girlfriend from Vermont, but she had moved down to the city to go to school and I moved down with her. So we're living in the city and I'm looking for a job. And I was on Craigslist looking at the listings for jobs and I saw a job description, classified ad for a hedge fund. They were looking for interns. And I was like, this is perfect. I'm in New York City. I wanted to get a job at a like a hedge fund or some bank. I wanted to learn the markets, and obviously trying it myself hadn't worked. So it made sense, but I was also terribly anxious. I had gone through high school and I became a young adult, and I was very, very anxious. I was going through a difficult time. My father had just passed away, and I was really struggling. So an internship for me was I was okay with an unpaid internship because then the expectations on me would be super low. I mean, I could let them down, but I'm not even paid. So you know what I mean? And so I applied and I got rejected. And it was really humiliating because I called. I was like, hello. And there was a woman on the phone. She's like, hello, who is this? And I said, oh, I'm calling about the internship listed on Craigslist. And she said, hold, put me on hold. And then someone else picks up. He's like, hello, who's this? And I was like, my name's Ross. I'm calling about the internship. And he's like, well, what's your experience? What are you in college? You going learning about finance? How much do you know about this? And I was honest. I was like, I really don't know much, but I'm really interested. And he said, well, we're looking for people that have more experience. We'll call you if I don't know. They never called me. And so I was like, all right, kind of bummed out. And so again, like a third kind of failure, just like trying, and it was like not meant to be. I got an internship working at an architecture and design studio, which was like my second choice. And that was fine. I worked there for several years. And then I moved back to Vermont. And when I moved back to Vermont, we were in the middle of the Great Recession. The job market was terrible. I was a college graduate at this point, but I really didn't have a lot of work experience beyond this architecture firm. And jobs in Vermont were paying, $12, $13 an hour. A lot of them were very, very low paid jobs. Even if you had not just a 4-year degree, but even a master's degree. I knew someone with a master's degree who was making, I think, $18 an hour. And I was like, this is a kind of like ridiculous, especially considering how much money you spend on your college education. I knew I needed to find a way to make some money. And I was living in Vermont. I didn't have a regular job. I was doing a little odds and ends stuff, but I needed some money coming in. But the market was so bad. I was like, what can I do from my computer, online to make some money? And there were different things that I looked at and kind of tried, and they didn't really pan out. There's some stuff with like copywriting or not, more like editing that I was looking at. There was a couple different jobs, graphic design, stuff like that you could do from home, remote work. So I end up deciding, well, what if I, get back into the stock market? It worked for Ben, right? It obviously works for other people. And so at this point, I said, I'm going to start really investigating it. And I funded an account again. This time I used E-Trade. I don't really know for any particular reason why, but I set up an E-Trade account, and I also had an Ameritrade account, and I decided to start trading. And immediately I got flagged as being under the PDT rule, pattern day trader rule, right? So I didn't have 25,000 in the account. So I was like, So that limited me a little bit to buying and holding or to trading options. And I did a little of both. So I started buying and holding penny stocks like my friend Ben had done. I started trading options on large caps in the S&P 500, and I didn't find any success with that. And so now I'm going to share with you the first step that I would take if I were starting over. If I were starting over, I would find somebody who is a proven, verified, real money, profitable trader. And I would try to figure out what they're doing that's working. I would learn their strategy. Now, for what it's worth, if you want to learn my strategy, I have linked in the description and pinned to the top of the comments my small account strategy worksheet. You can click it, you can download it. This is a PDF, so you can print it out, you can start using it in your own trading. The idea here is that this is sort of that business plan, that master document that lays out and articulates my strategy as I trade it today. Now, you don't have to learn from me. You could learn from anyone. It doesn't really matter. What's most important is that you're learning from someone who is proven profitable. Now, for me, when I was getting started, one of the big struggles was the fact that I didn't have anyone that I felt like I could learn from. So step one, learn a proven strategy. I didn't even know how to go about that, especially at that time living in Vermont. So what did I end up doing? I ended up dabbling. Now, when I was getting started, this fourth time, I guess it was kind of the third time, when I was kind of, back in it, I didn't know anyone that was trading. I mean, I had my friend Ben, but that was just a fluke and he didn't keep trading. He just had that one trade and then he was done. So I was really kind of on my own to figure it out. So I was just combing through the internet, and it was so hard to figure out what was credible and what was not. And when it comes to options trading, that's a really hard place to start as a beginner because options are a derivative. They're based on the underlying value of something else. And you've got to understand time decay. And there's just so much more packed in there that you've got to know as a beginner trader that's really hard. And so I didn't find success with that. I'd have some winners, but then I'd lose more on the losers. And I started digging myself a hole. I started going into the red. And so in my first year, probably because of some degree of beginner's luck, I did end up making a little bit of money. I made about $30,000, which in hindsight is pretty darn good. And for me at that time, it was good. I was pleased. I was like, this is proof of concept. But to be honest, it was really beginner's luck because I didn't have a real strategy. I mean, I was trying different things, but I had a couple of nice winners and then, I had some losers and this and that. Going into the second year, I lost 30,000. I gave back everything I had made in the first year. But the problem was when I was making money that first year, I was spending it as soon as I would make it, covering my cost of living. That was my job. So when I started losing money in the second year, instead of taking money out of my trading account to pay my bills, I started paying my bills with a credit card. So I maxed out one credit card, $5,000. And then I maxed out a second one, and a third one, and a fourth one, and a fifth one, and a sixth one. I had 6 credit cards maxed out. They were all within $1,000 of the limit, so they were darn close to being maxed out. So now I still have my trading account, but I'm holding $30,000 of credit card debt. And things are starting to get really scary for me. And at this point, I end up having a really big loss. It's the beginning of August. It's the new month. I had a goal of trying to make $5,000 for the month. That's what I was trying to make. $5,000 a month. That's $50,000, $60,000 a year. Basically $1,000 a week, roughly $200, $250 a day. That was kind of what I was mentally targeting. And when I was doing well, I had no problem hitting it. But here was the problem. This is what kept happening. I would have 5-6 weeks of progress, and in one day, I'd give it all back. I'd make $3,000, $4,000, $5,000, $6,000. And then in one trade, gone. I'd lose it all. My accuracy was decent. I had these long stretches of making money, but my profit loss ratio was terrible. And I kept having these days where I would just spiral. And it's not, just to be clear, it's not that I was having one trade that blew up my account every 6 to 8 weeks. What was happening is I'd have one trade that I lost, maybe a little more than average. Maybe I'd be down $800, which is a bit of a red day if your daily goal is $250. But instead of stopping right there, I would double my share size. And on the next trade, I would lose $1,600. And now I'm down $2,400. And then on the next trade, I would double my share size again. And now I'd be down $5,000 or $6,000. And so I kind of got into this mental spiral where I would snowball and I would stop trading. And at that point, let's be real, I was just gambling. And what was happening was I was becoming emotionally hijacked. I was becoming so afraid of being red on the day that I was taking huge amounts of risk in hopes of recouping the loss. Because my feeling was that whether I'm red 800 or I'm red 8,000, either way I'm red and I'm a loser and I'm an idiot and I've already ruined the day so much that what's the difference between being down, 6,000 or 7,000 at this point? And that's when I would just start taking more and more risk and I would spiral. And it took me a really long time to get that under control. And every now and then I still have a little slip up and I fall back into that tendency. I think a lot of traders do. Revenge trading, giving into FOMO, that downward spiral. And so that's what kept happening to me. This was an incredibly frustrating position because I knew that I was a profitable trader if I took away all of those days, right? If I was able to get myself kind of like dialed in. And for me, it required doing a few things. One of the things I needed to do was to get really honest with myself about discipline. And one of the other things I needed to do was get a little bit more dialed in on my rules. Because especially on those spiral days, I would start trading anything that was moving. Anything I thought gave me a chance at recouping losses, I was trading it. And that's why I would just start to spiral and spiral and spiral. I was going outside of kind of what I would normally trade, but I hadn't really articulated my strategy. Because in the first 2+ years of trading, I had been, kind of getting into a groove here and there, but I'd venture out. I was testing the water, trial and error, because I didn't have someone I was learning from. I was really just trying to figure it all out for myself. And I think that that really is a mistake. So let's just, for example, if you were going to open a coffee shop, I think it would make a lot of sense to work at a coffee shop for a while to understand how the business runs. You would learn the mechanics of how those businesses succeed, what works, what doesn't work. You would understand the margins, everything else. And the same is true with trading. So if you want to open your own business as a day trader, it makes a lot of sense to look at another day trader running their business and sort of like shadow them and understand, what are they doing that's working? Can you intern with them? Can you learn from them? Now, you have the opportunity to learn a lot from me. I put a ton of free content out here on YouTube. And of course, I do mentor students that are part of our community. But it doesn't matter whether you learn from me or you learn from someone else. Just to be clear, it's most important that you're learning from someone who is actually profitable. Because there are people out there who talk a big game and are trying to sell mentoring and coaching or classes or things like that, but they're not actually profitable. They're only making money on selling those things. So it's always important to check people's broker statements, make sure that they have them. Audits are ideal. I have both of them. Just, again, learn from whoever you want. I don't really care, but I'm just wanting to be very clear that this is something that's super important. So what I would do is I would learn a strategy that someone else is trading, because what you know is that somebody else is trading that strategy and they're making money. So in theory, I would think to myself, if I was able to learn to find stocks the way they are finding them, understand the entries and the exits, then that strategy should work for me in a similar way. Now, maybe profits would be significantly smaller because as a beginner, my account would be tiny. My confidence would be a lot lower. So I wouldn't expect that I would perform the same as them by any means, and you shouldn't. And just to be clear, my results are not typical. So you shouldn't expect if you learn from me, you'd make the same amount of money as me. But you would think, okay, this is a strategy that's working. So my first order of business is trying to learn it inside and out. And as you go through that process, you're going to learn a lot about the market. You're going to learn about how to read market depth, level 2, how to read time and sales. If you're doing options, you're going to understand options. You're going to learn all of these things. They're sort of, peripheral to trading, but obviously super important, but you'll learn it by sort of being hands-on. I am a hands-on learner. So I need something kind of in front of me to start putting it together. And that's what I did in my first trading account. I funded it with real money and I started putting the pieces together. There's nothing wrong with learning that way, but step 1, learn a strategy someone else has already proven is profitable. Step 2, practice that strategy in a simulated trading environment. A simulated trading environment is important because as a beginner, you'll make mistakes, and it's still hands-on because you're still trading, right? There's nothing wrong with using a simulator. Practice in a simulator and prove that you can trade this strategy profitably. Are you trading the same stocks? Are you getting, do you understand the entries, the exits? Once you get that dialed in, then step 3, start trading with real money. But here's something really important. Some people spend a lot of time on step 2. They'll trade in a simulator. I've known people who have traded in a simulator for years. That's not a good idea. A simulator is a tool that you want to use for a few months to help you learn just sort of the mechanics of how to trade, how to get in, how to get out, how to read the tape. But you want to switch into the deep end. You want to trade with real money really as early as possible without risking losing a lot, because you want to begin to experience the emotions that come with gains and losses. And you cannot experience that in a simulator. That's the one place a simulator falls short. Another place actually it falls short is that it can give you an artificial sense of confidence, because sometimes people will trade in a simulator with like 25,000 share positions and they'll be making 10, 15, 20 grand a day. But they're getting this ego that they're going to make millions of dollars trading real money. But then when they fund the account with real money, they realize that there's slippage and you don't always fill your full order. So it's really important in the simulator just to trade with like 100 shares. And your goal is just to make $20, $30 a day. And then go live with 100 shares, even 10 shares if you want. And just start practicing very simply making $10, $15 a day. And if you can make $10 to $15 a day, and you can do that consistently over the course of weeks and months, the only difference between 10 and 15 a day and 100 and 150 and eventually 1,000 and 1,500 is increasing your share size. Yes, you'll have a little bit more slippage with 1,500 shares than you have with 10 or 15 or 150 shares, whatever the case is. But realistically, that's still within the spectrum of reasonable. When you get up to 25,000, 50,000, 100,000 shares, you would have unrealistic experience between sim and real money. So I want to encourage you not to feel frustrated at the beginning when you struggle to make even $15 a day consistently. That's the one thing that can be frustrating as a beginner is you're like, oh, I'm trying so hard and I can't even make $15 consistently. And the fact is, once you realize that that is the hardest part, because once you're making 15 to 20 consistently, then you are a consistently profitable trader. And from there, you could scale up. So it's that final tipping point to going from just sort of break even, a little bit of profit and then a little loss, a little profit, a little loss, to turning the corner. So for me, the way I became a profitable trader was because I had a really big loss. The big loss I had, that was the first week of August, beginning of the new year, or beginning of the new month, that blew out my account. I was offline. I went back, I studied my metrics. I reviewed all of my trades, what I was doing right, what I was doing wrong, and I came out of that with a game plan of what I was going to do differently. I had a very strict set of rules, and I forced myself to be disciplined. I got a coach, someone who helped me not with trading, but with being a more disciplined person. This is something that it was actually easier to find a coach for that than it was to find a trading coach in those days. So I found someone that was going to help hold me accountable, like an accountability buddy, just with being disciplined and with being mindful and not letting myself give in to these emotions of anger, fear, and greed. Once I committed myself to focusing on trading just the setups that were within my strategy and having the discipline to walk away each day, usually by 10:30, that was a big turning point for me. I spent a very small amount of time in the market. I got out. I did that consistently. Rinse and repeat. Get in, get a couple trades, get out. Next thing you know, I'm putting together a couple weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks. Now I'm going strong. Now my account's growing. And what ended up happening is I actually grew my account all the way up to $50,000, just about 50 grand. And then in one day, I had a slip up. I was down about $5,000 on the day in one day, which was bad, but gave back 10% of what I'd made in the last 6 months. Bad, but still net positive. You know what I mean? Like, not the end of the world. And then I refused to give up. I kept trading. I kept trading. I kept trading. I kept trading. And then I took one trade on a breaking news stock and I lost 25 grand on it. My account, boom, all the way back down. And it was insane. It was the biggest loss I'd ever taken at that point by far. And part of me wanted to quit. And I wanted to give up because now, I've got 3 years plus of trading and I had profit and then I had a loss the second year and then I had some gains and then gone. But this is what I said. I said to myself, well, wait a second. Over the last 6 months, I grew this account to here. I am still the same person who did that. Did I go like that? Yes, I did. But I can do this again. So I started over. I took it on the chin and I started rebuilding again. And that time I kept going and my account grew to 100 grand. And once it grew to $100,000 for the first time, I was able to take out the money in a serious way, pay off my credit card bills. And now I was in the driver's seat. Recovering from your first big drawdown is a huge accomplishment because now you've got it. So for me, what gave me the confidence to know that I could recover was when I looked at my metrics. And that's why these metrics are so valuable. So if we look just here at the last 60 days here, you'll see the last 60 days or even the last 90 days, I've had a couple of drawdowns. I've had a couple of losses. I had 2 red days right here, right? So dipped down right here. Did I give up? Did I walk away? Of course not. I rallied back. And then I had a couple more red days right here. Did I give up? No, of course not. I rallied back. And today, I'll pull up my account so you can see, today ends up being a nice green day. And it's a day where I feel like, all right, I've been able to bounce back. I've shown that I can recover, and I've done this so many times at this point where there it is. So you can see $21,000 in profit today. Again, I'll say my results are not typical. You shouldn't expect that you'll achieve the same as me. All right. Whether you learn from me or you learn on your own, trading is risky, but a big, big thing for you is going to be to have your metrics, track your profits, track your consistency. And then when you have that first setback, you look back at those metrics and you say, yes, I can do this. I can recover. Now, I want to show you, this is a day 1/1/21 to 3/1/2021. I want to show you this little window here because while this was a really nice move here, and I traded really well. Right in here, I made almost $1 million, and then as you could see, I had a loss, and then right there on this day, if I put my mouse over it, I lost $274,000 in one day, and it took some time to recover that loss. But even a loss as big as that, I knew that I would be able to recover, and I did. And the only way I was able to do that was just by buckling down, sort of accepting that it was going to be a while. And so I sat down, I just focused, and next thing you know, the account's growing, green days are getting bigger, and, millions of dollars later, I recovered all of those losses. Step 1, learn a proven strategy. Step 2, trade it in a simulator. Step 3, switch to real money as soon as you've proven in a simulator you know what you're doing. Those are the 3 steps I would take if I were starting over today. And if you want to learn the strategy that I'm trading, I will post a link where you can download the PDF of my small account strategy. It'll be pinned in the top of the comments and it'll be linked in the description. I hope you guys enjoy it. I hope you hit the thumbs up. I hope you subscribe to this episode. And I'll remind you again, as always, trading is risky, so manage your risk, take it slow. And I'll see you back here for the next episode real soon.